Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up in their names, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back, knowing that it's...
Hey everyone, welcome back to the channel. So today we're going to talk about mortgage rates. It officially did drop. I told everybody that I believe that mortgage rates would drop by a quarter point. The day before, it actually did drop by a quarter point on December 18th. And guess what? They dropped it by a quarter point. The new guidance that we're getting from the Fed is that they expect that mortgage rates in 2025 will be around 6.25% and 5.75% in 2025. Now, mortgage rates have been a hot topic for some time, and because of that, it is getting a lot more difficult for the mortgage rates to actually come down because so many people are talking about the mortgage rates itself. That's a big problem. That's a big problem because I don't expect mortgage rates to come down quickly when it is in every single headline. It is on the news every single day. I just do not see a reality where mortgage rates come down quickly. And so what is going to happen in 2025? I expect some housing price reductions. Now, this took a long time, people. It took a long time. But I am seeing a lot of reduced prices on houses in my area, in my state. This is not something that I expected to see. This is not something that I expected to see. It took at least 4 additional months before people really started to drop the prices on their homes. People are starting to take their homes off the market. People are starting to rent it out instead because they don't believe that these prices they don't believe that their homes are worth any less than what they're trying to sell it for. And so for me, I'm absolutely fascinated by what I'm seeing today. I'm absolutely fascinated by the fact that these housing prices are coming down. And I know that once these prices come down significantly and then the interest rates follow, the homes would then be worth more and you're able to capitalize on those gains. A lot of people are out here trying to make more money than the property is actually worth. And we see that time and time and time again. There's a lot of properties right now that are way too overvalued. And when I say way too overvalued, I mean there was a home that was listed in my rental area in North Linden for $400,000. Now, granted, this home was probably twice the size, if not 3 times the size of my rental property. But my rental property is only worth about $205,000. About $205,000. So when you got a house for sale that's $400,000, nobody's buying that in that area where a house is worth $205,000. So guess what? I offered them $295,000, $105,000 less. Of course, you know what they said. They rejected the offer. They dropped the price down to $385,000 eventually. And they told me that they would go no less than $380,000. A few months later, they dropped it down to $365,000. Then they dropped it down to $345,000. Then they dropped it down to $330,000. I texted my real estate agent. I said, I offered these people $295,000 back when it was at $385,000. And they told me they wouldn't do less than $380,000. The housing price is now at $330,000. And they said, we're not going to sell for anything less than this. We'd rather rent if nobody reaches out. And guess what? Nobody reached out. They took the home off the market. They haven't put it up for rent yet, but they took the home off the market at $330,000. All right? My real estate agent personally told me, he said, I don't believe it's even worth $295. Not for this area. I don't believe that it would sell for more than $275. So essentially, I was willing to overpay even when it was listed at $400,000, and I gave them an offer of $295. This is why you should never go for the biggest home in the area, the most beautiful home in the area, because there is no comp for that home. It is its own comp. And whatever someone is willing to pay for that is what that home is truly worth. So right now, nobody's willing to pay $330,000 when houses in the area are going for $205. It would make no sense. There's no way you're going to get the value out of doing something like that. You will be holding that bag for a long time. I would be paying on that for so long with zero appreciation for at least the next 5 to 7 years. There's no appreciation to get from that type of deal. But at $295, I can justify at least $300,000 3 years from now. So that's only $5,000 in appreciation in 3 years. But I can justify going up $5,000 and rounding up to $300,000, while other properties around the area are probably worth $225, $230 at that time, in that same time frame. But if I had it at $275, oh my goodness, there's so much more money to be made, because I can get up to $25,000 in equity, bumping that up to $300,000 within the next 5 years. And I honestly do believe that was a possibility. Would they sell for $275? Probably not. I see that the house sold for around $130, $140, and I'm sure that they put a lot of money in there for renovations. That house did not have a balcony prior. That house did not have an extra bathroom and an extra bedroom prior. That house was boarded up, and now it is a beautiful, beautiful home. Beautiful, beautiful home. So I know that they spent tens of thousands of dollars after acquiring that property for $140,000. And so when you take all of that into consideration, you know that they probably want to make more than $20,000, $30,000, especially if they use hard money or any other form of a loan that requires them to pay interest, because now they have to pay down their debts and they have to still sell that property. And so renting may not have been their best option unless they're looking to refinance into a 5-year ARM or something, get a cheaper interest rate, and just pay that off like that, which makes sense. But now if they refinance the property and they take on a loan that is more than what the house is actually worth in the eyes of everyday people within the area, they will absolutely not be able to sell, because now the loan is just too much. The loan is just too much at that point. And so they're going to be relying on renters to pay that down in a property or area where it's probably not worth the rent price that would come about with a mortgage that high. And so I'm super excited about mortgages coming down, because it will make homes more affordable. It will allow people to sell homes that normally wouldn't sell, like that one. And it gives people time to really think and reflect on what it is that they're doing. We're no longer in that age of prosperity for a lot of these sellers. It is becoming a buyer's market with interest rates soon to drop and housing prices already dropping in most areas. Now, if you like this video, make sure you leave a like, comment, and subscribe. Are you a fan of interest rates dropping? Or do you believe that it should stay higher for longer so that the price of real estate can come down? Let me know in the comment section down below, and I will see you on the next one. Peace.